Last time we looked at Cardano, it was trading at about 90 cents. This was about 3 weeks ago, and in that time, it's rallied over 30%, and today is worth $1.15. In today's video, we're going to be looking at the last 2 years of Cardano, and we're going to be doing our best to compare what's happened then and see where that could take us in the future, and potentially why it's not similar to the last 2 years. And if you guys find this video useful, please give it a share, give it a like, subscribe to the channel. It really helps out. Now, before we dive in, I know there's a lot of stuff here, a lot of colored lines, a lot of colored circles. We're not going to be focusing on them just yet. They're going to come in useful later. For the moment, we're just going to be looking at these orange lines, and you'll notice that they are very similar in size. This first one is about 11 weeks, and what it's measuring is the high that we got back at the end of January in 2023 to the high that we got back at the start of April. This next orange line here, this measures the high that we got again at the start of December to the high that we got at the start of March. And the reason I'm looking at this distance is because if we take a look at what happened back in 2023, it was very similar in a way to what happened in 2024. We got this movement up, our first peak, we got a second higher peak, and then we had a strong retracement at the end of the year. In 2023's case, we came back down to the low that we started at. Our displacement was more or less zero. We came back to 25 cents. In 2024, we got again a strong move up to our first high, a bit of a retracement, and then the second rally up, putting in a higher high. So notice again, we are getting a higher high in these two examples on the second peak. And then for the rest of the year, we traded down. And now what we've currently gotten so far this year, or close to this year, we got this rally back in November, and it came up like all these other previous highs before. It came up and tagged this resistance line. So I think potentially we might see another retracement back up to this resistance line from 12 weeks after our first peak, and we first kind of hit this price at around the start of December. Again, you'll notice the times. Here it was December, here it was January. So as the years go on, we're roughly losing a month each time. So these are kind of 11-year periods that we're dealing with here. And you can see what we're currently going through does look really similar to what we got to the last few times. We got a peak, here we got a peak. We came down a small bit and traded at a low for a few weeks. We have come down a small bit, and we have been revisiting the lows that we first put in for a few weeks. And then we got another move up slightly higher above the first peak. Here we could potentially be seeing the start of that move where we've now returned to $1.15. Potentially we could move up to something like $1.33, which is the previous wick high, or we could even move above. This resistance doesn't have to hold for anything. We got the similar thing in the first rally, a bit of a retracement down, of course, a higher second move. 12 weeks from our first peak here puts us at the end of February. As of recording, it's the 17th of January. Again, you don't have to, it's foolish to assume things will play out exactly the same. To assume it'll be 12 weeks when we hit this price is dubious. It's not a guarantee. Nothing is a guarantee. But we could see a strong move happen by that time frame. You know, whether it's 10 weeks from this peak, whether it's 15, who knows. A reason why we might see a much stronger move in the near term is if we look back at 2019 to 2021, we can see we got quite a similar looking chart. And now there are of course a few differences, and we're going to talk about them. But if we just look at the broad picture, you can see that we first stayed below this resistance line at the start of 2019, and you can see that we broke above it and beyond, well above beyond, in January of 2021. So this period lasted about 2 years. Now again, just quickly, how long ago did we first start trading below this resistance? It was December of 2022, January of 2023. We are now currently in January of 2025. So 2 years of duration. If you think it's going to play out similarly in terms of time frame, you could be expecting a strong move like this. Another little candidate for this is if you want to look at the peaks, if you want to look at the amount of times we tested this resistance after the halving, we tested it once, where this blue circle is here. And funnily enough, we have another blue circle here to match. We tested it once after the halving, came down to a low, traded slowly up for about 2 months, 2 or 3 months, and then we made a move back up, double high, broke above. Potentially, That could be what's happened here. We've had our move down, trade slowly up for a few months, 1 or 2 months, move back up to a double high, which is what you might expect if it wants to tag this trend line again in February, mid-February timeframe, if this 12 weeks thing is going to play out. But what we might see is, instead of it returning back down to these lows, like we've seen every single time before that, where we get the second high and then we put in major lows, we might see it move up, because that's what happened last time when we hit this time duration. And that's when we went to put in our bull run. I think that's not an unlikely situation. Now, there are a little pitfalls as to how you want to look at this. Again, it is selective. If you want to just count it as the first peak or the first test after the halving, it looks nice. But we can see this cycle, we only tested this resistance 3 times before we broke above it. So far this cycle, we've tested it 5 times, and we haven't broken above it yet. So there's going to be at least 6 attempts before we break above. What's also dissimilar is we didn't get this first smaller move, then this second move. Here we just had the first move, and then the final move. We also didn't have this COVID rally and crash before the halving. But in terms of the actual moves, like we saw here, they do look very similar. And that's what these circles are mapped to. Basically, we're mapping 2019 to the 2023 to 2024 kind of performance. And we can see it is the same. Green, blue, red. So low, first high, second high. Low, first high, second high. Retracement down to a low that is above the first. Retracement down to a low which is above the first. And then here, depends on how you want to look at it. You can either count this as a rally up and a retracement. There's no reason not to. Or you can kind of exclude it and say that this blue circle here is the final test before we break out of it. And then we have a purple low below that. And then after the purple low, we break above. We don't know if that's actually the case yet, because that might not happen here. To be honest with you, I think it will. I think we've been due kind of a bull run for a long time. But again, there's no guarantees in the market. You can also look at it as this blue circle here maps to this blue. And we could see a strong pull down after this. Although, again, that was COVID. You can't really bank on that happening. And then after we get this low, we have a very strong rally and see a similar thing. I don't want to spend too much time on that, because we'll just go round in circles, basically. Another thing that you'll know is after we got this first test after the halving, again, we did slowly trade up sideways for a couple of months. I also think that could be very possible. Now, again, this is the 17th of January that I'm recording from. Trump is going to be inaugurated on the 20th of January. Whether you like him or not, he is the most bullish president America has ever had on crypto. I think, however, on the 20th, which is his inauguration, I don't think we will actually see a huge rally. I could be totally wrong, but over the last few years, when we've had these big events, we've actually seen assets struggle. Like the ETH merge strikes me as one. The Ethereum merge was a really big deal. Happened back in September of 2022, I think, and the price traded down on the day of the merge and continued to for a long time. I don't think it's going to trade down. I don't think it's going to be bad for the markets, but I don't think we'll actually see a huge mega god candle. I think, to be honest with you, it'll look like a normal day, but I could be totally wrong. That's also my opinion. Ultimately, what happens next depends on, first of all, if you want to believe that similar things happen each cycle, you don't have to think that at all. Something brand new could happen. Something brand new will most likely happen. It also depends on how you want to compare to the last cycle. You can argue there's variations, because here it was 2 years, but once we passed the halving, it was basically up only from there. Here we passed the halving and did nothing for like 30 weeks or so. If we take a look, 28 weeks it took us before we had this first green move. Lots of variations. And ultimately, I think that's important to consider. There will always be variations from cycle to cycle. But I do think it is worth looking at previous cycles and seeing what happens. Because we called this move on this channel back in September of 2023. I did say we could see something like this happen again. I didn't think we'd retrace actually this low, to be honest with you. But we kind of called the double peak. You can check the videos. I doubt you'll give a fuck to check the videos, but they exist. I would also ask you not to, because they are mad cringe. But yeah, each to their own. The final point before we move on to BTC is, if we look at the bull market support band, we can see that after the halving, when Cardano had this rally, which, I'm going to look at orange circle. After the orange circle, we had this rally. It came back to the bull market support band when it got rejected from this resistance, and it traded through the bull market support band. Currently, the bull market support band for Cardano is at 80 cents, We have wicked that low very recently. Given a few weeks pass, the bull market support band rallies up a bit, maybe to 90 cents. I wouldn't be too surprised if for a couple of weeks, the bull market support band high is at 90 cents to say, 95 cents. And we see Cardano trade within that a little bit. Ultimately, I don't know. But potentially this purple circle might not be the low that we see yet. We could see a stronger move down. And it could be a strong move down to the bull market support band. Ultimately, it's just worth keeping in mind. I actually want to check as well very quickly. If we go back to this first double peak situation, how long did it last? It was 12 weeks as well. I know we spoke about that at the start of the video, but it's basically always 12 weeks between these two peaks, and that's what we've gotten. If that's what we're getting again, it's safe to assume maybe a similar time frame of 12 weeks will play out again from this first wick. Anyway, I think that's more or less everything I wanted to cover with the USD. Oh, potentially where could we go? Well, again, if we're assuming that this blue here is equivalent to the blue that we have here, how far up did Cardano rally after this blue? I'm just going to take it from this peak. We saw to the all-time high for Cardano was a 2,000% rally. I'm not saying that's impossible, but I would also say expect smaller returns as the cycles go on. Because here, this first cycle, I know we don't have much data for it, but realistically, Cardano rallied here about 4,000%. So if you want to be very basic, look at it as like a quadratic equation that's decreasing. You might want to expect a 1,000% move up here. So the change in difference is 2 or minus a half. So if we go 1,000% up from where we are currently trading, or the blue, the peak that we were at, I'm not going to have space for it, so I'm going to shrink this down. 1,000% puts you at about $13 for Cardano. Not impossible. Quite a high bar though. We're going to need a pretty good bull run for that. It depends whether we get it. Again, this 2021 bull run, money printing was going crazy. Currently, rates are still high. We are cutting rates in America, but it depends. There's not as much spare money floating around like there was here. This was when everyone had 500 quid coming in every week for doing absolutely nothing and they were staying at home all day. Anyway, just some interesting points that I thought you would find interesting. We're now looking at the ADA Bitcoin chart. We're not going to spend too long on this one. Basically, I just want to compare what happened around the halving times. So we can see back in 2019, we had this first peak, and then after the halving, we kind of had this double top, this second peak, and we got a bowl here. This move also from roughly around the halving time, from when this rally started to when it ended, the duration of this rally, we moved 200%. This was just after the halving. So we have a peak, a rally just after the halving, and that rally brings us up to more or less a double top, technically a slightly lower high, but I'm just going to call it a double top for sake of ease. Here we see a similar thing. We get our first top before the halving. We drop down, we rally up about 200% from the start of this move to the end of this move, and that ultimately puts us around a similar price. Technically it's a lower high, but again, just calling it a double top for ease. So far, these two moves have occurred both at the same time during the cycle, roughly. This one's a bit right translated. It happened a bit later on, but ultimately it's still around the halving. It's good for me. What did we see back in 2020 when we put in this second peak? What happened? Because so far, we can argue that's what we've gotten so far. We got this second peak. What can we expect next to happen? Last cycle, we got 3 lows before we got our bull run against Bitcoin. Remember, the price of ADA can go up against US dollar, even if it's going down against Bitcoin. So this could all happen while ADA's going up against US dollar. But on Bitcoin, again, we got 3 lows. And these lows took place over 13 weeks. So from the first low to the last low, it was 13 weeks of duration. However, from the peak to the last low, it took 23 weeks. So we can see there's quite a bit of variation there. And arguably, you can say that we've already gotten our first low here. Because if we zoom in, you can see we get our peak, and then we get quite a big drop. I mean, if we take from the high wicked to the low, ADA dropped 40%. And then we've rallied back up since that. So I think you can safely call that a low. We put in a low, we rallied up a bit afterwards. There's a clear drop. So if that is our first low, the question pops up, do we measure, is the duration of time to expect, from high to the final low? Are we waiting 23 weeks? like here, from this high to this final low? Is that going to be in 23 weeks? Or are we just looking at from low, first low to last low, being 13 weeks? And potentially that's what we have here. From this low to this last low, it could be 13 weeks. Well, if it's the 23 weeks from high to low, that's putting ADA bottoming out mid-May of 2025. So approximately four months from now, which is actually quite a long time. And if you look at when historically ADA has bottomed out, it's usually towards the end of the year. So to have one middle of the year would be quite odd. But again, things don't have to play out how they always have. Things can be different. So potentially this is saying mid-May. Here, if we get the 13 weeks, that puts us at March. Now, March would look closer, would look more realistic compared to what we've had before, which has been December and November. So kind of towards the end of the year-ish. Technically October if you want to count the start of the chart. So, kind of plus 2 months each time. March would roughly line up with that. But again, some things just don't line up. Another way of looking at it is when we get the peak. So from the high here to the low to the peak. Again, if we're following the 23 weeks, last cycle it was 35 weeks of bull run. From low to the high. Not the all-time high for Bitcoin ADA, but to the cycle high. It was 35 weeks. If we're going to go 23 weeks plus 35, that's putting us at a high in January of 2026. I think this is way too late. I don't think we're going to be still rallying against Bitcoin for this long. I think that the peak is going to come soon, as it has always historically, and we see this with other altcoins as well. The peak often happens at the start of the cycle at some point, with it before the first half, before the halfway point, somewhere around a quarter, give or take, or a third. I think this is too far of a jump. If we're going from the 13 weeks, it is more likely, in my opinion, it puts us at the end of this year, November 2025. That would be about a third of a cycle, give or take, just over. But again, that's a long amount of time. What I think will actually happen, or is most realistic, the time frame that we're most likely to be around, is how long after the halving does it take for Cardano to put its top in? How long does it take? Last cycle it took 67 weeks. So if we again map 67 weeks from the halving that we had back in April, that gives us our all-time high in August. When did the last cycle high occur? It occurred in August. And that's like when all altcoins and Bitcoin topped last cycle. That was August. I'm not saying seasonality means much, but there is definitely some small value to it. It's not non-existent, but I think that's what fits, to be honest with you, with what happens each cycle. And as we can see, as we've looked at the charts, the cycles do look quite similar in terms of the patterns of move that they get, how long that they last for. There are trends, there are reoccurring themes. And I think, again, while I always say don't expect the same thing, you shouldn't. Things won't be the same completely. It doesn't mean that there can't be similarities. And if you look at Bitcoin's chart, you can see those similarities from cycle to cycle. That's why this cycle theory even exists. Because so far, it has been relatively accurate at predicting price, or at least price movements, not percentages or costs, but good at predicting price movements. And you can also, there's a lot of ways of looking at data. Like again, if we go for the 23 week plus the 35 week, that puts us at a high in January. Back here, this first cycle that we had for ADA, this high was in January. So it depends. It all depends how you look at things. And ultimately, it's up to you to decide what you think is more likely to happen based on previous things, but also what's happening at the moment. There's always going to be geopolitical and these things that will affect markets that you can't predict. And things like inflation too. So it's good to just be aware of what's happened before if you're interested in an asset or you hold it, and where inflation could be potentially heading, and what inflation was like during the times you're comparing to. Because it was crazy high over here, and here it's relatively, it was increasing drastically here. Here it's increasing to a much smaller amount at the moment. Anyway, if you are actually interested in that, you can go check it yourself. There's loads of cool stuff on YouTube and Google that make it very easy to see these things. Thanks so much for watching. If you liked the video, please leave a like. If you didn't, leave a dislike too, that's totally fine. Comment down below which one of these you think is more likely to play out. Because honestly, I don't know, and it would be good to see what the general consensus is on these things. Thanks so much, guys. Take care and peace. Please be recording. Thank fuck.